top stories of the day. Let's move on now and bring in Chris Conway. He joins us live from Australian Stock Report out of Melbourne. And Chris, what are you watching today in markets? We're up about 0.2%. And I've got to ask you, because it's such a big day for that summit between Kim Jong-un and Donald Trump, is that having any impact whatsoever on equity markets in your view?
Good afternoon, Ingrid. Yeah, look, I certainly think that it is, not from a headline perspective, but it seems that no one really wanted to do anything big leading into the summit. You know, obviously no one wants to get their positioning wrong and lose a whole lot of money on what may come later. But it's not really having a big impact on markets outside of that, and probably won't until, 6 p.m. tonight when Trump speaks, of course, ahead of the US session. But the thing is, we've all stopped to watch it. We've all stopped to pay attention to it. So in that regard, yes, it is having an impact.
In terms of going forward, I mean, I guess it's significant that, it's a historic meeting and it certainly is significant. It's in Trump's best interest for it to be a successful meeting and probably arguably in the world's best interest. But in terms of going forward, do you expect a move, in the US dollar? Do you expect asset classes, risk asset classes to increase? Because even when we saw, I guess, negative news coming from the two of them, when there were, it was a bit more conflict between Trump and Kim Jong-un, at least a war of words, there wasn't much of a negative impact on markets.
No, there wasn't. And as North Korea was testing nuclear warheads and missiles, there was momentary down moves in the market, but ultimately, the market really looked past it. And I think that's the story here. I mean, let's face it, North Korea makes up a very, very small percentage of the global economy, and it doesn't really engage in the global economy, so it has even less of an impact. So, yeah, look, I don't think it will have an impact. It will have an impact, however, on Donald Trump's standing in the international community and the US's standing in the international community. But from a business perspective, no, I wouldn't have thought so. And just looking back over the course of history, I know there's a lot of negative people out there saying that this meeting won't lead to anything. One need only look, and this is something that's sensitive to me because of my Irish and English heritage, the Good Friday Agreement, which was signed in 1999 between Britain and Ireland, ending, let's call it 700 years of war. Those peace talks took 6 years. So if we're at day one today between the US and North Korea, well, let's figure that these two guys probably won't get it done quite as quickly. So, it could be a 10-year process before we see the other end of it. Not to say that it can't happen, though. Yeah, and it could be Trump, not necessarily Trump ending those talks. It could be a different president, obviously, given their limits to their terms there. But look, moving on from that for the moment, because we'll get more on that shortly. We'll have Tom Switzer joining us live to talk more about those discussions today and that summit in particular. But I want to talk the market more broadly. You bullish on markets now? I mean, where do you sort of see the market heading, I guess, in the medium term, or at least in the next month or two? I am cautiously bullish, Ingrid. We had that test of 6,000. I know the market dipped below that level, but it was relatively well supported. And then we had, I would call a turning week last week where, it was a positive week, and, we've sort of limped out of the gates today, but we are positive again. So hopefully some of that momentum that was built last week can carry into this week, provided the two great leaders don't do anything stupid to upset the apple cart. Yeah, look, I'm relatively bullish. I'm happy to be adding risk at the moment, but I wouldn't say that I'm all in by any stretch. All right, so in terms of some of the risk, and we've talked about the summit, but also the trade risk going forward, you've also got a tightening cycle in the US that's likely to see, interest rate hike as early as another one as early as Thursday. The ECB this week also set to sort of talk about easing back policy. So that real sort of macro environment is looking like a tighter global environment. Do you expect that to impact equities as well, and in what way here at home? Yeah, look, I think certainly the language around the FOMC is important, and whether they shift gears on what the neutral rate is. So, yeah, that could be important. Again, though, I think central bankers, US, ECB, the Fed and the ECB are still wary that we're in a delicate global economy. Yes, we have synchronised global growth, but even that, there's been some data points recently that have suggested it's not quite as strong as we'd previously thought. So I think global central banks will be reluctant to do anything unexpected or untoward. So yeah, we'll probably get the interest rate hike, like you said, Ingrid, on Thursday. But I don't imagine there being any drastic changes in the language that would upset things. And what does that mean for equities locally? Well, we already know this is coming. We already know that gradually we're going to get a tightening a cycle or a tightening environment, like you rightly say. But again, it's always about the pace of it. If it happens quickly and unexpectedly, that's when things can go awry. If it happens as planned, and let's face it, central banks around the world have been very, very good at telegraphing what they've been doing recently. You know, one need only look back 10 years, you certainly didn't get this sort of clarity about what was likely to happen. So as long as they manage it appropriately, I don't think, you know, there needs to be anything untoward happen. And again, let's just pivot back to global synchronised growth. If that can continue, then I think equity markets can continue to push higher.
All right, let's move on and talk about some stocks now that you're looking at in particular, and BHP Billiton's one of them, obviously going through some negotiations at the Escondida mine, the copper mine, with the unions, and that's thought to be broadly, I guess, supportive of the stock at the moment. Well, not supportive, but broadly positive at the moment, at least what's coming out of that from what we're hearing. But what's your take on BHP going forward? Because there's been a couple of different analysts, some cutting their expectations, others actually building on their expectations for BHP.
Yeah, look, certainly we're bullish, and we bought it within the last couple of weeks. And look, I'm not surprised that analysts probably are starting to diverge in their opinions, and that's because it has had a pretty strong run. And I think the target prices for a lot of these analysts, when they were recommending it, probably sub 30, was in the $34 or $35 region, which is where it sits now. As you know, Ingrid, I'm an oil bull, and I have been for a while. Obviously, the sale of their shale assets, as was reported last week, I think they had early opening round bids in the $7 to $9 billion range, which was at the upper end of what people were probably hoping for. So that could be a catalyst. So I'm certainly one that thinks, yeah, probably 36, 37, 38 is a realistic possibility. So, you know, happy to be adding, especially on a day like today where it's down or has been down, you know, sort of 1.5%.
Any others in that space that you're adding to at the moment, Chris?
Yeah, Newcrest is one that we like, and this probably comes a little bit more from the long-term fundamental guys that I work with. They're pointing to, obviously, the KDM mine has had some problems. It had a tailings dam failure. That led to some production downgrades in 18, but then that production is expected to be made up in 19, and they're looking at using the recent share price weakness to accumulate that stock. So again, transitory factors. What's the catalyst is that they'll get over the problems with the tailings dam, and you know, I would think it's a relatively supportive environment for gold itself.
Okay, let's mention Qantas, because I know that's another one you're holding, and it's just interesting. It comes on a day when Virgin's Chief Executive John Borghetti announced that he will not be renewing his contract at the company. He'll be stepping down as Chief Executive before 2020 when that contract ends. What's your take on Qantas v sort of Virgin? And obviously Virgin Australia is a very different stock given its low liquidity in the market. So it's a hard one, you know, for retail investors to hold anyway and trade. So it makes it a very different proposition to Qantas. But just talk us through why you like Qantas at the moment and how it compares to Virgin.
Certainly. So just from a trade perspective, Qantas has done everything right of late. You know, just one need to have a quick glance at the stock chart, and you know, it's a nice uptrend. The catalyst would be them reinstating their dividends and possibly a beat when they drop their numbers in August. So there's a few catalysts there that could see the equity price move, you know, sharply higher, really. Oil prices have come off a little bit recently. That's a nice tailwind, although it doesn't make all that much difference the way they hedge their book. But just in terms of the story between Qantas and Virgin, you know, Alan Joyce embarked upon the turnaround story for Qantas, I think 5 years ago now. For 3 years there, it was classified as a turnaround story. Now it's just considered a company that has really strong and growing revenue and earnings. And you can't say the same thing about Virgin. Now, John Borghetti, I would say, has done a pretty good job taking the airline from where it was to where it is now, but it's nowhere near as advanced in its turnaround and progression as what, say, a Qantas is. So I think that's why it's lagged, and obviously why we like Qantas more than we like Virgin.
All right, and let's talk Boral as well, another one we're watching at the moment. I know one that you hold, no doubt, as a bit of a trade, but watching it today, hearing from Macquarie analysts, or at least reports from Macquarie analysts telling clients that it's ready to strike a deal around its JV in Asia, so the Asia Pacific JV, which of course is its plasterboard business. Talk that it may either buy the extra 50% it doesn't have, or perhaps think of striking some sort of deal. What is your take on Boral? And I guess, what are the catalysts for this one that you're watching when you look at it as a trade?
Sure. So the initial reason why we got into it is not so long ago they had another announcement surrounding their Headwaters acquisition in the US. It wasn't a good one. It's the second time that they've missed or had to downgrade guidance. Again, transitory factors, weather-related. In the Midwest of America, there's been more rain than they had anticipated, and that's affected their ability to sell product. So it fell 10% on the day, and we just thought that sell down was overdone. It had trickled a little bit lower than that from the time that we bought it, but it's sort of turned higher today. I think it's up about 2% today. So obviously that story you mentioned is helping it gain some traction. Look, with a big acquisition like Headwaters, I'd say we're not surprised to see some ongoing integration and synergy issues. But ultimately, we think that is a fantastic acquisition, and that's going to help grow their business in North America, which is really the key market. Still only accounts for 25% of their revenue, mind you. 75% of it still comes from Australia, so they've got a really solid base here. But they're setting up in America, and they are positioning themselves to take advantage of, what eventually will be hopefully a big lot of infrastructure spend from the US government.
All right, Chris Conway, we'll have to leave it there, but appreciate your time as always on the program. Thank you.
Thanks, Ingrid. Cheers.
Chris Conway from Australian Stock Report. Just